While perhaps not a household name like some TikTok stars, Jordan Belfort was the focus of the movie The Wolf of Wall Street. After 22 months in prison, he is out and he wrote a book called The Wolf of Investing. Belfort is very critical of the fees that big financial firms charge. During an interview with Tucker Carlson, he told the story of Jack Bogle from Vanguard, who went to war on fees.
When he started Vanguard, Wall Street went out on the ultimate smear campaign for like a decade, suppressing everything about index funds, saying it's the stupidest thing. Who wants to be average? Dreyfus, which is a huge mutual fund company, said, no fees, no way. So for many, many years, Vanguard languished and was suppressed, right? It finally got traction after the crash in 87. For the first time, all of a sudden, the mirage evaporated when everyone lost a lot of money. And for the first time, it suddenly became a mass exodus out of these, sort of high expense mutual funds, right? And Bogle saved the public probably a few $100 billion by now in fees. Mutual funds were ripping people's eyeballs out forever.
Now, I know a fee analysis is something that the Retirement Guys formula does. When you do that kind of analysis for your clients, what are some of the common things that you find?
We love doing fee analysis. Again, with this time of year, it is the time at home where I'm going to start changing out my closet and go from the winter wardrobe to the spring wardrobe. And, one of the best things ever is when you put a spring jacket on that you haven't had in a year and you put your hand in your pocket and you pull out $20.
The
I don't know
best.
if you've ever had that. Yeah, it's just fantastic. And for me, it's like helping people go through and find those, hidden dollars that they forgot all about or were not aware of when they look at their portfolio. So the first thing I would say is if you look at Jordan and his comments that he made here, again, the person that the movie The Wolf of Wall Street made famous about is one thing I would say is be cautious about getting advice from somebody who spent time in prison, right?
Sure.
That's one observation. He's talking about avoiding getting ripped off. But I guess, again, if you want to listen to avoid getting ripped off, you might want to listen to somebody who did rip off a lot of people and spent time in prison for doing so. And fees aren't necessarily a rip-off, meaning that the cheapest isn't always the best, but cost absolutely counts. And it's important to understand, when you do an analysis, are you getting enough value in exchange for what the fee is? I had somebody who had recently come into our office, and that this particular lady was probably about 5 to 7 years away from retirement. She's not married and has no kids. And, her primary concern is like most retirees today, not wanting to outlive their income. And, I get that with single, no kids. She's just got to take care of her money. And so we spent some time going through a planning process and looking at what her minimum monthly income needs were and what her ideal income needs were. And when we looked at the portfolio, she had purchased what is called a variable annuity in the past. And the variable annuity, the goal of that was to provide more predictable income in retirement time. The challenge is, when I did the analysis of it, not only did I think the variable annuity cost structure was really high in comparison to some other alternatives out there, the income value that was offered to her was not nearly as close to what it could be in today's environment. So there's like good and bad annuities, just like there's good and bad stocks or good and bad bonds. And it's a matter of understanding and knowing what you have and what you own. We do have an event that we're having here coming up in Toledo, talking about the truth about annuities. If you go to arhq.com and you click on the events tab, I encourage you to sign up for our upcoming event, especially if you have an annuity that is a couple of years old, because it may be worthwhile to do an independent review of that annuity when you're looking at the cost structure, as well as what you're looking at and determining what it can provide for you. When I did an analysis of this particular lady's annuity, what I had found is that because interest rates went up so fast so far in the last year, she could take only about 60% of her account and put it into a different annuity account and get the same level of income to provide the minimum monthly income needs, thus freeing up about 40% of the money that allowed us to do other things, maybe even more conscious, lower cost type investment approaches. But when you're breaking down fees and when I'm doing a fee analysis for a client, this is what you want to write down, the things that you want to know. First of all, you want to know about, number one, management fees. These are the fees that are charged by like mutual funds, exchange traded funds, management accounts for the ongoing management of the portfolio. They can range anywhere from what's considered 0.5 or 5 basis points. Some run as high as 2 or 2.5% more annually. Those management fees, when we do the portfolio analysis, these are the ones that are oftentimes a little bit harder for people to see because they're typically buried in. But in that fee analysis that you talked about, Chris, this is something that we can show you exactly what those management fees are. Number two is you want to look at expense ratios. The expense ratios, they represent the annual operating expense of the mutual fund or the ETF. And again, they're usually a percentage of the average net assets. They cover things like administrative costs, management fees, other expenses associated with kind of running the fund. They can be more expensive for more actively traded funds, and they can be less expensive for more index type strategies. Number three is sales loads. And so sales loads are fees that are charged when you have the buying or selling of certain mutual funds. And these are usually a percentage of the transaction. So you have what's typically referred to as like a Class A mutual fund would normally be what we consider to be a front-end load that's deducted from the initial investment. Things like oftentimes called Class B funds or back-end loads. They're charged if you redeem your shares within a set period of time. And some funds have level loads, which can be assessed on an annual basis. Number four is you have advisory fees. These are the fees that are charged by financial advisors for providing investment advice and portfolio investment management. Advisory fees are usually structured as a percentage of the total of the assets under management. It sometimes can be also a flat fee. It could also be quoted in terms of an hourly fee. It depends upon the advisor's fee structure. Usually these fees are fees that you see would be debited out of your investment account. So the nice thing is you can see those fees and expenses printed on the statement, and or you can ask your investment advisor for a copy of what is called his ADV. And inside of his ADV will outline the different portfolio management services that are offered, as well as what the typical range of advisory fees are. Number five is trading cost. Trading costs, have gotten a lot better, in my opinion, over the years. In the last 30 years, there's even trading expenses going down. But what you have here is when, buying and selling of a stock, bond, or other security through a brokerage account, investors are going to sometimes incur different types of trading fees. And these are the fees that are based upon the broker, the volume of the trade that's executed, and what type of investment it is. So sometimes things like stocks could be a lower cost trade than, say, an option or some type of limited partnership, or something that's less liquid could have higher fees. Number six, you have custodial fees, and custodial fees are the fees that are charged by brokerage firms when financial institutions for holding and kind of safeguarding your investment account. These fees are typically charged on an annual basis, and they can kind of vary, again, depending upon your investment size. Number seven, account maintenance fees. Some investment accounts such as IRAs or 401ks, those type of plans can have account maintenance charges charged by the financial institution or the plan administrator. A lot of these times, account maintenance fees can be kind of minimal. Those can be expenses that they might charge a flat fee. And number eight, like I talked about, is in annuities. Some different annuities have fees and expenses associated with it. Variable annuities, in my opinion, tend to be one of the most expensive type that are out there because you have not only sub-account fees, you could have rider fees and sub-account fees, and those can add up to be quite a bit. Sometimes when you have fixed and or fixed index annuities, some are no fee and other ones have fees depending upon what the parameter is of the account. So if you haven't had a portfolio x-ray, as you can see, I just rattled off 8 different types of fees. And some of those fees are probably adding value to you. And some of those fees, maybe you can eliminate those fees to keep more of your hard-earned money in your pocket. So if you want to get a second opinion, or if you're not sure what you're paying, pick up the phone. Again, if you are listening to the show, just tell them that you listen to America's Retirement Radio here and listen to the show, and you want to get that portfolio x-ray to understand your fees and expenses, and we'll provide you that printout, absolutely no cost, and walk you through what your total fees and expenses are.
Just as a way of saying thank you for joining us here on the show, that number is 419-794-3030. There's a decent chance that you may be paying more in fees than that $25 thing that you see on the bottom of that first page. There are things buried in there. Having this analysis done can shine a little bit more light on that, and then perhaps explore other options out there if it better suits you. 419-794-3030, or you can go to the website and find out more about that upcoming event at arhq.com.